Hey everyone, it's Dan Blackwell, and on this week's video, we're going to discuss why to invest in multifamily properties. There's really 4 categories in which we look at investing in multifamily properties. Number 1 is cash flow. This is the most important reason in acquiring multifamily real estate. Maybe you don't get cash flow year 1. Maybe there's some value add you got to do to get the rents up to then cash flow, but cash flow needs to be the most important reason why you're making a multifamily investment purchase. The number 2 reason is appreciation. They're not building any more B and C class workforce housing properties in Southern California. It doesn't pencil. Even if you got the land for free, you can't build properties for $200,000 and $300,000 per unit. So for those reasons, we are in a supply constraint market where we're seeing growing number of population, growing numbers of people wanting to rent apartments for housing, and there are no more units coming to the marketplace. So for that, you're likely to see a better chance of appreciation to happen over the long term for multifamily. Number 3 is tax advantages. There's a lot of great reasons to acquire real estate, and multifamily real estate, a lot of investors have grown their portfolios by completing 1031 exchanges and building up their portfolios, selling properties, going from 8 units to 10, 12, 20, 30 units, growing over time and building a portfolio without paying taxes. They're deferring that gain. So 1031 exchanges, also cash out refinances. If you're either investors are completing 1031 exchanges or they're growing their portfolio by acquiring a building, and over time as the property appreciates, they're pulling out money tax-free and acquiring another property. So that's another way to grow wealth and not pay tax. And then number 3 is cost segregation. Now we all depreciate multifamily real estate. However, cost segregation became very, very popular over the past few years, especially with bonus depreciation, where you can take majority of the depreciation you have over the 27.5 years. There's certain components that you can discount over 5, 7, and 10 years. And within bonus depreciation, you are eligible to take that out over 1 year. So it can significantly help you with write-offs and paying a lot less in tax. So cost segregation, if you're not aware of that, you might want to Google it a little bit and get familiar with it so you can save a lot in taxes. And then number 4, one of the big components with acquiring multifamily real estate is it's a relatively safe and durable asset, and you'll have capital preservation. This isn't a high risk. You're not developing an asset. You're not buying something that's very speculative. It's typically going to perform very well. Overall, if we look back, trailing fundamentals have been very strong within the marketplace. So then transitioning from those reasons, we're now going to take a little bit deeper dive into a specific property. What are the 4 categories we look at when acquiring a multifamily property? So the number 1 is the location. Location, location, location. There's really no difference. And that is a very, very important part of what you're buying. Is it in a good submarket? Is it in a good location? Number 2 is going to be condition of property. Is this property in fair condition, or does it need a lot of work? Is there a lot of deferred maintenance? That's something to consider. And then number 3 is going to be, what is the opportunity? What is the upside in this investment? A lot of these B and C class workforce housing properties, they're value add opportunities. Maybe they need to be upgraded with new finishes where they can raise rents. Maybe the rents are way below market. We've seen drastic amount of rent increases over the past 5 and 10 years. So not every apartment building owner has kept up their rental rates. So their rents could be 30, 40, 50% below market. So there could be a good value add opportunity within the asset. And then lastly is going to be pricing. Is the property priced right? And a lot of folks, myself included, can get hung up on pricing because we remember when pricing was $200,000 per unit, $150,000 per unit. Now it's $300,000 a unit, $350,000. So I think you really, looking back in the rearview mirror is not necessarily the best strategy because you can kind of miss out on opportunities within the marketplace. You really got to look to see what is it priced relative to the current market, the current comps within the marketplace. But if you have a property that checks 4 out of the 4 boxes, I recommend you drop what you're doing and go over and look at that property, put a fresh set of eyes on the real estate. That could be a phenomenal opportunity. It's very hard to find something that's in a great location, that's in good condition, that has upside, and is priced right. Even if you can get 3 out of the 4 boxes checked, that is definitely a go. So those are the reasons we believe why to invest in multifamily real estate, and then on a little bit deeper dive, what we look at on a localized level within the property. So thanks so much for watching this video. We really appreciate it. If you are looking to acquire another multifamily property, feel free to reach out to myself or anyone on the team. If you want to send me a direct message or an email, feel free to do so. We'll continue to keep putting out these videos for y'all, and we will see you on the next one. Thanks.